Hello traders, it's the day after FOMC, so we're just going to have a little breakdown, see what happened. We're going to have a discussion about what was said and what it means for the markets, the currency, obviously the US dollar. Um, so just to start with, we know that the dot plot didn't change. We had a rate hold at 4.5%. That was very expected by the market. So the actual rate decision doesn't really have any effect. So a very big misconception in the markets is, oh, we're having a rate decision that's going to move markets. The rate decision itself very rarely actually has any impact on price. And that's because very often a rate is or the expected rate is already priced in. So right now we've just had the rate cut. What's happening now in the markets is traders are starting to bet on what they expect the next rates to be. So the period from now until the next rate decision, that's all pricing in what they expect that rate to be. So when it actually happens, it's not a shock. We don't really see much of a difference. What actually happens in the markets, and the reason we have large or can have large market moves, is because of what happens after. What happens after is the FOMC press conference where Jerome Powell will come out, he will talk a little bit, and then he'll take a Q&A and he will answer questions. And then we get more insight into what the Fed's looking at, what are their thoughts, can we get any forward guidance? So that's what we are really paying attention to, not the rate decision itself. We would only really see a large move off the back of a rate decision if the rate decision comes out much different than what traders expected. So for example, this time we priced in a hold. However, if the Fed came out and cut rates early, that would be a shock. And that's what would lead market participants to reprice their position, to reposition, and that would lead to market repricing. But as we had a rate hold, we obviously didn't see that. So we need to then go ahead and have a look at what was said in the meeting or the press conference. So one thing that we should highlight is that growth forecasts were cut. Now, I actually can't find a graph on GDP growth forecasts. I didn't really look too hard. But anyway, we did already have a reduction in GDP from 2.7, well, actually, sorry, from 3% down to 2.7, down to 2.5. So it wouldn't be a huge shock if we actually come even lower on the next GDP print. Inflation and unemployment projections have been revised up, which means the Fed are expecting higher prices and more job losses. So this is just feeding into, again, the sort of more bearish factor with the US dollar that I've been talking about for sort of the medium-ish term. I flipped from very, very bullish on the dollar to neutral, and now I'm much more bearish than I was previously. So if inflation is going up and the Fed is wanting to cut rates, that will generally mean they'll have to hold or maybe even pivot to hiking. So higher inflation generally leads to rate hikes or rate cuts. Rate holds. If we have lower inflation, that will often lead to the central bank to hold rates or cut rates. Obviously, when I say hold rates, it depends on what their initiative is anyway. So if they're looking to hike rates, but they can't and inflation's coming lower, they might have to hold or even, again, pivot to cutting potentially. So here we have inflation. Now, Powell was asked about tariffs and the inflation impact on tariffs. So he did say that it was a factor. We obviously know that tariffs are inflationary, but he couldn't give an answer to how much, which is fair enough. So if we have a look here, this is the US import prices. Now we can see they've been relatively stable. Obviously, we did have a huge rise over here. They're not always the same. You know, we're not going to see just a flat, straight line. But we can see since Trump really obviously didn't come into office until this year in January, but since sort of September, October, we have seen import prices creeping up and up and up. So this is very likely to continue, obviously, as tariffs develop and as tariffs sort of continue to play a role. So the Fed's inflation expectation does actually remain anchored. So they're not when I say anchored, what that means is they're not expecting inflation to run away up or run away down. It's going to stay sort of within range, you know. But as always, if inflation doesn't come down, then they're going to have to hold a little bit longer. If it goes up, they'll have to hold longer. If it comes down, that will give them room to cut rates a little bit sooner. So it didn't sound like the Fed were really in a rush to cut rates. There wasn't any huge deal, to be honest. There wasn't anything that raised red flags or alarm bells for traders. So you can see at the moment, the markets are currently pricing in a rate hold with an 80% expectation or probability. However, we only just had FOMC, so what will likely happen is this could very well stay the same. I'm not saying this is going to change by much, but we will see this fluctuate between ease and change. as we see more data, as we get more inflation data, as we see more labor market data, we will start to see this maybe change more in favor of an ease or more in favor of no change. Straight away, the day after, it seems the markets are expecting a no change already. Powell also mentioned that recession risks are slightly up, but again, we've already discussed recession actually on one of my videos on Sunday. I did discuss the recession fears. I personally don't really see the economy going that way, to be honest, especially after current data. However, if we do see a continued downslide or downturn in data, such as continued lower GDP, we get worse labor market data, lower business confidence, consumer confidence, then yes, maybe we could start considering it then. But at this time, I'm not really accounting for a recession just yet. So the main focus going forwards is inflation and labor market data. So pay attention to things like NFP. We've got jobless claims, JOLTS, unemployment rate, and obviously CPI, PCE. So just keep your eyes peeled. As for the dollar itself, it seems to be doing actually very well the day after. During the actual FOMC meeting, or sorry, the press conference, we actually didn't see a very, very good reaction, really. We saw stocks up, so the S&P, NASDAQ were up off the back of it. We saw the US dollar down. We saw euro dollar rising up. We saw gold going up as well. However, now the market seems to have digested that, and now again, pricing in that sort of rate hold again, it seems that the dollar is doing pretty well so far. So I would, just based on technicals, this isn't really related to the Fed, I would expect some sort of pullback here. Now, again, this is just based on technicals due to this huge drop we had over here, sort of from March. Yeah, from the end of February to sort of mid-March, we did, or start of March, roughly, we did see a huge drop. So I would expect this to get somewhat corrected or pulled back. So I am aiming for this 50% 618 pullback as the fib. As you guys know, that's what I trade. That's how I find pullbacks. And then the potential continuation to the downside. So it wouldn't surprise me if we do see the dollar get supported off the back of higher inflation. And obviously the idea of no rate cuts immediately anyway. But longer term, as I just discussed, it wouldn't be a shock if we do see a downturn as we get potentially higher inflation, lower inflation, or maybe worse labor market data, whatever the data comes in as. We'll have to take it, obviously, as the Fed does, data by data. So guys, that's pretty much it. Again, there wasn't anything super complex or any huge red flags, but I think it's important to do a bit of a breakdown like this, show you some of the data as a visual and not just as text, because I do break these things down in the Discord for obviously our members. But you know, we've got people with all different levels of experience in here. So some people may watch it and completely understand it on their own. Some people may want to read it. Some people will just have no idea what this is all about. So I think it's a good idea. So you can see here, this is the currency strength actually during the FOMC meet, or just after, you know. So the way they normally work is we have obviously the rate decision, we have the press conference, Powell will talk, we'll have the Q&A, and then the Q&A will often have the major questions first, and then once the important questions or the relevant questions are sort of done, then it leads off into a little bit less interesting stuff, less impactful stuff, and then that's kind of when I stop watching. So this was sort of when I stopped watching after what I would call the major questions. So we can see the yen actually saw a huge inflow as we saw the dollar spike right down. So you can see here it was the worst performing currency just after sort of the major questions were done. So we can see, you know, the New Zealand dollar did pretty well. We see the Australian dollar doing quite well. So it wasn't really a risk move, because obviously you can see, the Australian dollar is a risk on currency, and the New Zealand dollar as well. Whereas we also saw the yen do pretty well off the back of it. So it wasn't really a risk move. It was more of just capital flows, liquidity into the markets. Then we also had here, obviously, the statement, which, again, I'm not going to go over this because we already discussed the main talking points, but some people will understand what's going on, some people won't, some people just need a little bit of help, so that's what this video is for. If you completely understood it anyway, then you probably didn't get much from this. I tried to make it as simple and straightforward as possible, but as always, if you've got any questions, please leave a comment, or if you're in the Discord, you can ask in the Discord. You can actually join the Discord 100% free for the first 7 days. If you don't like it, cancel any times, no risk. We're actually up around 6% this month, which is very, very good. So I can show you that here. So you can see our results. We're up actually 5.63%. So this is this month. So yeah, very, very good returns. Again, if you want to join, you can. But guys, that is it for this video. Hope someone got some value out of this. Please like and subscribe if you're not already. It just helped me out a lot. So guys, have a good one. I'll see you all very, very soon.